So you're an entrepreneur, you have a business, you're trying to expand, you're trying to grow, and now you're looking to raise some investment capital. Here's probably why you're not getting the money that you're asking for, if any at all. What's going on, everybody? My name is Q, aka the People's Planner, and welcome to another episode of the People's Planner podcast, brought to you by the Clever Group. Here where we share a bunch of different educational insights inside the world of the clientele that I work with athletes, attorneys, and entrepreneurs, as well as give you guys an idea of what I would tell you if I was your financial planner. So without further ado, let's hit the spin wheel and let's get the topic of this episode. Let's see what they give us. So this one is going to be for the entrepreneur market. So the topic of this one is going to be what investors are looking for, aka why are you probably not getting the funding that you're asking for. So to dive into this one, so let's go down this journey. So you're an entrepreneur, you're a founder, you have a business, and you're trying to expand, you're trying to grow, and now you're looking to raise some investment capital. Here's probably why you're not getting the money that you're asking for, if any at all. And first of all, to understand and grasp the idea, the funding landscape of investment world, equity world, you break it down into different phases. You have a pre-seed phase, which is pretty much your friends, family, and fools phase. This is where you're bootstrapping or you're raising money from your close relatives and somebody that's just buying into this dream that you have. So that's the pre-seedish stage. You also have some investors that may invest there, but this is not going to be, it's going to be in your tens of thousands. Following that, you go into your seed stage round. This is where you kind of craft this idea into some type of product, some type of direction, and you're trying to finish development, whether it's an app, whether it's an actual product that you can sell, whether it's a service, whatever it is, you're trying to craft it now. So this is where you kind of go get some of those smaller VC firms that are going to invest in you and or some angel investors to start up. And this is going to be somewhere maybe between the tens to 100,000 is where you're going to kind of get the seed range. But then when you go into series A, B, C, and on forward, this is where you kind of touch those mid 100,000s all the way to the millions of investment funding. And this is pretty much, particularly in the series A, is when you have an idea that turned into a product, and then now you've gained some market traction, you've gained some revenue, and now you want to expand your product. So that's where Series A plays a part. And then B, C, and D, and going forward, those are pretty much where you're just building upon that expansion. You just now you turn it into more of a conglomerate at that point. So those go into the tens of millions of dollars and going forward in that aspect. But to kind of really particularly stay on the Series A side of things, inside the world of Series A funding, which is predominantly who I work with, these are people that they're looking for those that influx, that infusion of capital to expand their company. You may or may not have that expansion model built out yet, but you kind of have an idea of what you want to get yourself to. So it's crucial to understand, like I said, the landscape of just the startup world in general. You have to already have a proof of concept. I know a lot of the firms that I work with and point a lot of my guys to, they already got certain criteria. Like different VC firms at this level, different private equity firms at this level have different criteria. You have to have had revenue. You have to have a proven concept. You have to have all those things before they can even be interested in you. So kind of nutting that out and understanding what that is critical. But the biggest challenge for you is navigating all of this without a map. I think oftentimes, like many promising founders, you find yourself in this position where you're hitting a lot of dead ends because you're not meeting people. That's my theme of the year. You're not meeting people where they are. You're just going out, and I know, and I understand being an entrepreneur myself that it can be very, very difficult, but you're unable to attract investment whenever you are not really strategic on who you're talking to and understanding what that person, what that firm and fund is particularly looking for. You follow me? So as you kind of walk yourself through this journey, there's a bunch of different obstacles and challenges that are going to come about, and it's normal and it's natural, and a lot of that comes within the investment world. You need some funding to get your company to that level that you want to get it to, but you gotta have, I can put it to you like this: there are three things that many investors are looking for. These are the three prominent things all investors are looking for, not many, all. It's team, product market fit, and opportunity. There's a lot of other factors that they look for. Different of them kind of specialize in some criteria, but when it comes down to the three most critical things, it's team, product market fit, and opportunity. What do I mean by team? Why are you the person I want to invest my money in? Why are you three or you two people or however many founders that's pretty much heading this thing? Why are you guys the team that I believe in? It starts there. And then second, you pass that test, it's product market fit. All right, what you're selling. All right, you might be great people, but what you're selling, are people really looking for this? Is there a market for the product that you're making, the service that you're selling? Is it just going to be a waste of time? Is it even needed? Can it be replicated? So all of those things go into the product market fit. And lastly, it comes down to opportunity. Cutting straight to the chase, what investors are looking for is, can we get our money back? So whatever exit opportunity that is down the road, whether it's another price round, whether it's an IPO, whether it's a merger, one of those three things is pretty much what investors are looking for when it comes down to opportunity. So those are the three biggest things to keep in mind whenever you're going to meet with investors. Because if you're doing your whole pitch, you want to make sure it aligns and it's structured to exactly what they're looking for, and you're not just running around like a bat out of hell, not understanding the ins and outs and who you're meeting with. You want to meet folks exactly where they are. But when you can't articulate everything well enough, you can kind of screw yourself up. So I know there are a lot of folks that are more technical than most folks. So that's why you always got the pretty much three different types of founders. You have the hipster, you have the tech guy, and then you have more of the brains. So you got the guy with the direction and the vision, that's the brains. You got the hipster, the guy that knows how to sell everything, and then you have more of the tech guy, more of the technical guy. Sometimes one can be all three, sometimes one can be two, and you just find the other person, but typically that tie is made up. But oftentimes, whenever more technical founders are trying to pitch to investors, you can bore the hell out of them. Like, you can bore us to death, especially when you're pitching in a pitch competition as well. You can bore the entire audience, and you probably have a great product. But if you can't articulate and present and be able to pitch well enough to get them interested in you, then it's going to be tough. So being able to figure out how to tell a compelling story through that. And one big thing, like one nugget to think about and understand, is you never want to present it as if you're selling a product or a service. You always want to frame it as if you are selling a solution. You are solving a problem for something. If you frame it in that aspect, then it turns more emotional from an attachment standpoint. It seems as if it's not just, you're not being it's more of a purpose of why you're doing it. You're trying to solve some type of problem. And a lot of investors look for that. And when it comes down to the team aspect, man, knowing that you have a solid team is critical, because that's going to be the biggest part of it. When it comes down to investors looking at and reviewing you and going through due diligence, a lot of it is going to come down to the background of the team. So this is where you got to brag on yourself, but also you can't shoot yourself in the foot and be, very sporadic in a bunch of different decision makings, because ultimately it does come down to that as well. But once you kind of got your head on a swivel and you got kind of a map kind of ironed out and figure out somewhat of a direction, you understand a little bit about your problem that you're solving, you got your team mapped out. So you want to make sure the market potential is there. So that's the next thing. So being able to make sure that the market potential is there. What I mean by market potential when it comes down to product market fit is seeing how many people from a customer discovery standpoint are even interested in what you're selling. There have been a lot of founders that I've worked with in the past that you put thousands of dollars, hundreds of thousands of dollars into an app before you even ask folks if they want the app. So you just put all this money into development, and then you don't even know if people need this. So once again, meeting people where they at is essential, because if you don't do that, then like you burn through a lot of the capital that you raise, and that can turn off a lot of investors. So understanding like the market potential, the market that you're in, and show the evidence of possible growth down the line. Like, you have to be able to show investors the growth of this market. Like, it's a $1 billion market. It's going to be 2. We plan on capturing this percentage of them, like something in that aspect, so they can understand and see. Because a lot of times investors may not be familiar with your industry, which is fine. But ultimately, you as much as you're able to present it to them and justify the reasoning for being in this market, as long as they believe you, as long as everything is truthful and ironed out, man, it can go through, right? It can absolutely happen. But you want to make sure you can show evidence of that and be defensible, because a lot of investors will drill you. A lot of them, they know things, they know business at the end of the day. So you want to be smart by what you're saying to them. Showing a sizable market, I think, is attractive, but also the go-to market strategy. So this is how are you going to get in front of those people. So you can sit up here and tell me about the market size that you're in, but being able to iron out, all right, how are you going to plan on getting in front of them? What are you going to be doing? Are you going to be doing trade shows? Are you going to be doing South by Southwest, attending conferences? Are you going to be in social media, influencers? What different marketing strategies are you going to be doing to get in front of these said people, this said target market that you're going to be at? I think that's critical to understand. A lot of times, a lot of founders miss that, especially when going through the Series A. Because in order to get to that Series A phase, you kind of got to go through that C phase of ironing this out, but Series A is when you want to expand upon this and kind of really, 10x a lot of the things you've already been working on. But being able to address that and demonstrate that, I think you're more likely to capture the interest of an investor, as well as those three things. So the climax of your journey as a founder in seed or Series A phase revolves around your pitch and how well you deliver it. It's all about delivery and the narrative side of telling your story. But you have to understand that telling a story is the point where this is where you can capture their interest and get them attracted to you. But you can do the whole song and dance all day long, but you have to be able to show results and show measurables behind it. Because once again, you can be a great team but have a terrible product market fit. Is going to damage everything. So being able to tell a story, but capture that story and showing real results through what you plan on doing for whatever product, whatever industry you're working in. And it got to be able to talk about the vision, right? The traction, the growth potential, all of those things. It's the make or break moment in any phase of your entrepreneurship journey. Being able to sell your story and sell exactly what you're doing as a solution, and just being able to capture, that moment that you have with that investor, because typically you only get one shot, man. And a lot of times, it's on to the next one. There's a lot of different people with a lot of great ideas, man. So you can possibly miss your chance. So being able to hound in on the element of your pitch is critical and crucial, because one slip up on your pitch and that can ruin everything. And this is even for those that are probably still, I think Series A is where you kind of fall out of the pitch competition phase. This is where you want to pretty much start to, I guess, get away from the pitch competition vibe and really be more tailored to having those those direct conversations with the investors. So this is where your pitch is going to shift a little bit from what it would look like during pitch competitions, but now it's going to be more themed towards personal investors. What exactly are they looking for? Understanding their investment thesis and understanding like the metrics that they're looking for when it comes down to even, the size of checks that they're writing when it comes down to funding founders in any aspect. So once again, it just has to be persuasive. It has to be persuasive enough for you to just compel, like bring this attraction and this moment to them where they can feel a part of your vision and your story. Because without that, and just what a terrible pitch, you can find yourself very, very quickly left behind in the funding world. And there are other areas you can fall into, but then that's a whole nother episode. So when it comes down to the opposite side, so for the startups who fail to secure those Series A funding, the consequences can be very, very significant, right? Because especially when you have a burn rate that may be too high and you're really looking to expand and you have all of these great, ideas. So without that capital infusion, you might be able to struggle to maintain operations. You might struggle to hire talent, execute the growth plans, like all of the things that you had the vision for as a founder. It might put it all at risk. And especially when you have competition and competitors that are trying to beat you out. So they're working, they're grinding, they're going through the same motions. But whenever you fail to secure and properly secure yourself for that funding, that's when everything can really turn into madness, right? And it can be really, it's gonna be real hell, put it to you like that, whenever it comes down to it, because then you start scrambling, then you start getting desperate, then you start taking all of this. You might take X amount of dollars from this angel investor over here that might not be a good guy, and you're just giving up some board rights or some equity that you shouldn't have. I think things go into that metric where it kind of gets all out. But hope is not really lost. You can still fight back by really, like I said, taking the proactive steps to enhance attractiveness to investors. So just redefining everything that you stand for. And know that there's multiple different investors out there, but it's all about getting in front of them. So I ask yourself who's the ideal investor for you to even get in front of. Because if you don't do that, if you don't go into the world of figuring out, be targeted, then you're going to find yourself once again scrambling, and then you're going to just be getting money from anybody at any point in time. So meeting people where they are is the theme of the whole conversation, man. Just being able to figure out where people are and meet them at that point is crucial, because you don't want to be seen as that guy who is just, all over the place and you're chaotic. But redefining your value prop, because that's going to be that's a secret sauce of your entire pitch, is the value proposition. So this is what separates you from your competitors. So if you're going through the pitch deck and you're presenting the problem and then the solution, and then you iron out what the product is and the service that you're going to be providing, the value prop really captures what, if you're doing this, then what makes you special from this company that's doing that too. So redefining that to where it can become more of a standout when it comes down to investors, right? It makes me feel, attracted to you because you're a little bit different than them. You're not the exact same thing. So ironing out your value prop is critical, and just strengthening your team. So this is where building your advisor board can be crucial. Not only your team of founders, but also your team of advisors. Putting the right people in your corner that have expertise, that have been doing things in this field that you're in the industry that you're working in, like, that's big. Like, knowing that somebody is in your corner as an investor, that's somebody that's an expertise. As an investor, I'm looking at that as, I like that, because I know that you're not doing this on your own and you're not, winging it. You have people in your ear that you turn into and relying on. So yeah, think about yourself. Think about it by putting yourself in an investor's shoes and understanding how they're looking at it. They're giving you money, and then your whole goal as a founder from that point is to help grow that, right? Grow your business, but also growing their returns. So being able to understand it from their angle of, okay, how can I make myself attractive to them? How can I make what I'm trying to do attractive? And having a solid team of advisors along with your team of founders is also critical. But at the same time, just fine-tuning everything. And the last thing, I guess, to fine-tune would also be the go-to-market strategies. You might need to retweak how you want to get in front of your target audience, your target client. Most of the time, the biggest funding allocation in all companies is marketing. Being able to market and get in front of it, whether it's using social media, whether it's hiring a marketing person, whether it's hiring a sales team. It's something in the aspect of marketing is when, that's probably the big chunk of funding that a lot of founders are needing, right? Because that allows you to get in front of people that ideally aligns with whatever product or service you're offering. So just redefining all that, man. Whenever you kind of do fall out of that Series A funding, whenever you get passed up on, man, hope is not all hope is lost. So keep your head up through it. It's a grind, and it's a constant step of just staying up to date with what's going on in the market, what's going on in the area, but also just, man, being around, walking in rooms, but continuing to just redefine everything as you kind of fall out the loop, I think is critical. But as we kind of wrap everything up, man, I want to give a 2-minute warning. Let's get my timer out, and we're going to summarize everything we talked about, and let's kick it off as of now. So to summarize everything, man, to give y'all an idea on all the things we talked about. So understanding, first of all, the different phases of the funding world. So you got seed, pre-seed, seed, Series A, B, C, and all the way down. Understanding different areas of them and what they require, as well as what investors look for whenever you pitch to them. The 3 biggest things they look for is a team, product market fit, and opportunity. So why are you a great team? Can people actually buy this, or will they actually buy it? And how am I going to get my money back? What's the process of the plan for that? And just building everything through some type of plan, some type of direction, right? Because navigating without one, you can be seen as chaotic, you can be seen as all over the place, and that sometimes can be unattractive. Most investors do understand, though. But as a startup too, it's going to be a lot of challenges you're going to be facing, man. So making sure you tell a compelling story, making sure your pitch is down packed and put together to where you can deliver it and meet people where they are. Understanding what investors you're meeting with and understanding what they like to hear outside of those 3 things, understanding what their themes are and pitch to that. Don't just go in there with just a regular rough draft or a regular draft of what you send to every investor. Man, make it tailored towards whoever you're meeting with in the Series A phase, because predominantly, they're different people. You want to make sure you're hounding on your team too, man. Assemble a talented team of people, especially advisors that you can kind of rely on and turn to. But know that whenever you're going through this, it revolves around your pitch, and it's a make or break moment. So at the end of the day, it all comes down to that. And the last point I guess I can say is whenever things do fall through the cracks, fall out, understand that hope is not all lost. Being able to put yourself in a position to just redefine everything, remap out everything, and reposition yourself in a position where you can get in front of different investors that may fit this new scheme. So being able to retailer everything out so that way, you can honor yourself in that aspect. And I've just hit the 2-minute timer, just at the buzzer, beat it all. In conclusion, man, just understand that all those things are critical in the VC world, in the startup world, in the founders and entrepreneur world, especially Series A. But it's not all just about having a great idea. It's being able to just communicate everything. So that's the biggest thing I'll leave you guys with. But once again, man, I appreciate you all for tuning into this episode. It's been exciting to talk to y'all about this world because this is one of the world that's, that energizes me a lot. Please stay in tune as we kind of keep this trend going and kind of keep everything going and sharing different ideas and insights around different topics and giving you ideas of what I would do as your advisor, because a lot of this stuff really applies to how I kind of coach folks up and work with them to guide them through the whole founding journey of being an entrepreneur, right? The whole funding, the whole landscape of it, what it's like, because it can be very confusing. But in the meantime, man, appreciate you guys. Please like, share, subscribe, comment. Let me know what y'all think about it. And then just keep the movement going. But you all know the motto. Always be clever. I'm out.